Good evening, friends. Good evening, colleagues. I'm just going to wait a few seconds more here. I think, Sandra, shall we start straight in? I think we can. The room is warmed up there. Thank you, Sandra, for helping there. So, colleagues, friends, it's a pleasure here to welcome you to this event, this webinar tonight, where we've got a really set of illustrious speakers from in and around the world of risk financing and development to talk about issues, especially related to the 4th International Conference on Financing Development, which is coming up in July and June this year in Sevilla. The Financing for Development Conference, for those who are not aware, really kind of sets the development scene when it comes to issues of financing. And it's a 10-year, every 10 years that we come together. Development community is a member-state-led process. And we from the UN, for example, and government and industry working together where appropriate on that, but led by member states. There is a preparatory session this week happening in New York, and we have a virtual session to accompany that. And the title of the event, which is particularly important, is Future-Proofing Development, the Absence of Financial Resilience in a World of Rising Risks. The absence here particularly relates to this first zero draft, whether ourselves and colleagues from industry and indeed some government and other UN colleagues are seeing that the first draft really could be strengthened to really deliver financial resilience as part of the package of our commitment to all of our member states and our communities within them into the future. So thank you very much for joining us. So first of all, to kick us off and to really set the scene, I would like to welcome the UN Assistant Secretary General and UNDP Regional Director for Asia Pacific, Ms. Kani Widnaraja, to provide an opening set of comments. Thank you, Kani, please, if you could.
Thank you, Jan, and thank you to all of you for joining us today. And you've got a great panel here with folks from industry and different parts of working the insurance question with us. And this is going to be, in my read, a fundamental part of FfD4, because this is a real opportunity, I think, to influence, to speak with world leaders who need to really reimagine and rebuild a robust global finance architecture that delivers on the SDGs, but also does so pretty much in leaps and bounds while reducing the burden of unsustainable debt. So where I sit, the question is whether prosperity and well-being for more people, does it have to come at the cost of burning up our planet? And this is a very real issue. And maybe this is a moment, with everything that's going on around us, to take stock and look at ways that finance, the larger world of finance, can it move the needle towards that right kind of development? Now, we know there's enough capital to achieve these goals. The financing gap to meet the SDGs, we say, is $4 trillion annually. And global wealth stands at 450 trillion. So the capital to achieve these goals exists, but it does require sharpened focus and smart thinking on what it would take to move some of that wealth into SDG-aligned investments. And that includes how we work with the world of investment. So one way, and a priority for UNDP, is to significantly reduce the risk of investing in developing economies by supporting policies, institutions, promoting transparency and rule of law. At the same time, we're partnering with governments and the insurance industry to expand local insurance markets, to scale coverage, to reach more vulnerable communities who have hardly heard of insurance, let alone be covered by it. And then building capacity at all levels around this question to manage risk. Now, we know with increasing climate and geopolitical volatility, insurance and risk finance have been and will increasingly be an influential player in directing us to where the adjustments then to this global and local financial architecture, systems, policies must be if we're even going to get to see that somewhat even playing field. Now, I oversee UNDP's work across the Asia-Pacific region, and that's home to about 60% of the world's population. It's also the region really most affected by natural disasters and climate shocks. So if I look at 2024, the disaster-induced economic losses in the region was something around $75 billion. But less than 9 billion of that was actually covered by insurance. So what you would call the protection gap, the difference between the insured and the uninsured losses, was at a high, very high, 88%. So a quick reflection of what we've learned about the new market out there for insurers in a development context. First, we're seeing that insurance actually helps stabilize and supplement national recovery budgets. They help to build back much faster in disaster-prone areas of the world. I just think of Pakistan after the floods or Philippines after typhoon after typhoon. These come to mind. Now, second, with the expertise that you bring with risk modeling, pricing, underwriting expertise, insurers play a key role in facilitating the more sustainability-driven, larger investment portfolios. We've seen recently numbers like 10 trillion of commitments for low carbon infrastructure, whether that's in energy or transport or in buildings. This will require insurance coverage to make these investments actually a reality. Now, third, if I take a big case study, the FSO Safer operation, the big oil tanker, right, that was sinking in the Red Sea with 1 million barrels of oil on it. That was saved and it averted a $20 billion loss in ecological damage and even much bigger in trade losses. And it showcased how insurance can make the impossible possible. And enabled a very complex operation to take place, even amidst conflict. Now, fourth, sometimes the much less visible, so not as dramatic as the FSO Safer, but where there's massive impact that touches the life of millions. That, to me, has been the story of crop insurance for small farmers. And we have seen and supported this as UNDP in parts of India and Kenya. What a difference this makes. Fifth and last, I think advances now in technology have been an accelerant to increase access to insurance for individual households or business ventures that can now exist where they did not dare to go before. So if I think about coverage for small businesses, women-led businesses in Afghanistan, or health insurance in Somalia, these are dramatic new developments. So let me close on a note of pragmatic realism. As parts of the world become seemingly increasingly uninsurable, whether that's due to climate risks or crises, I think we need a new age of public-private insurance partnerships and a new age of leadership and policymakers and industry leaders to really create runways to get us to these tough spots, to find solutions that bring relief to those directly impacted and actually benefits the larger public good. So I hope that as you reflect on the renewed value of FFD for the world today, that reducing risks, investing in resilience, and maintaining insurability for human development and SDG progress is a core strategic priority. Our shaken world, I think, needs this more than ever. Thank you.
Thank you so much, Candy, for those inspiring words. I'm going to move on to the panelists now and to take this forward. I mean, there was a lot there which you were talking about. I just want to pick out maybe just as particularly related to FFD and also perhaps particularly for those thinking about insurance and financing development, perhaps from the initial perspective. I'm going to take away two particular things that you said. On the one hand, there's financial protection, financial resilience. You talked about the protection gap, which is huge, especially in developing countries. And you picked out your region, 80 to 8%, where you have protection gap with regard to losses. And that's important. The vast majority of the developing world, and actually quite a lot of the developed as well, does not have financial resilience. Does not have insurance. And the impact of rising risk and hazard and shock is having a huge financial and therefore a larger burden. The second piece, which you very, very clearly unlocked for us, is the relationship between uninsurability and uninvestability, which is yet not particularly well explored, and perhaps particularly in light of FFD, which talks a lot about investment. The inability perhaps of it to really quite articulate the relationship between the two is one of those things that we probably would like our colleagues and experts to hear from. But so thank you so much for joining us today. Now, friends, I would like us to go directly to our panel here. We've got a few questions for each of them. First of all, Mr. Hector Santana Suarez, Head of the Insurance, Pensions and Social Security Unit, Ministry of Finance and Public Credit in Mexico, one of our partners where we have some initiatives there, particularly looking at insurance for farmers and also a set of different things as well that you're leading on for us. So this is my question to you, sir. So as of course you're aware, Mexico is a co-facilitator of the FfD4 outcome document and the process. And of course, it is also a country which is and has historically been heavily exposed to different hazards, earthquake and droughts and cyclones, and indeed, I'm sure others. So I'd like you, sir, to consider, do you see a need, an opportunity to make de-risking mechanisms like insurance more prominent in the, if you like, the new development financing framework in FfD4? How would you consider that, sir, from your experience?
Well, thank you. It's a pleasure being with you today. Well, let me tell you, for us in Mexico, partly as a consequence of the significant exposure that our country has to natural hazards, and as you have already said, all different kind of hazard, hurricanes, earthquakes, drought, you name it, and we have some areas in our country prone to suffer from such events, and of course also to those that are directly consequence of global climate change. But the main concern for us also is that I think there is a huge opportunity that should be taken, because the most vulnerable groups are often those that do not have any protection scheme to preserve their quality, their of life, their welfare, and so for us that's an important concern. And we're fully aware also of the fact that you have to explore new products and new ideas, and we have to take into account technology. But in a very brief answer to your question, we're fully determined that insurance should play a bigger role in the development of our societies all over the world, and that's clearly the case of Mexico. We have this vulnerability across the board, and we have seen from experience that without proper financial protections, you can be regions and communities that they'll lose in a moment the development or the advances in development of many years. So there is a nature need to take into account these vulnerabilities and to make them part of the process of development. Which kind of development, how we prevent the effects of a disaster, how we can protect those most vulnerable, and also how we can mitigate the risk and again share the risk among our societies in a most ample way, so that there is no single actor that keeps the risk for themselves. For us in Mexico, we are committed also to international cooperation. That's another element that we think very relevant, and also of a stronger dialogue and exchange between private and public sector. Very briefly, I think that insurance provides an essential tool to manage all these risks. Insurance also helps us to plan and to consider in advance how those risks may affect our societies, and therefore prepare or be prepared when the emergency comes for a prompt answer, and to keep the ability of our country to protect our people. And to do that as a government agency, we are fully determined to guarantee our cash flow in order to be able to an immediate response in the emergency, but also for a prompt recovery of the pre-existing conditions for our society without necessarily affecting other programs that are relevant for a society of as complex and as vibrant as Mexican society, and with obviously all the challenges, both in terms of social and economic development that we have to face. We have established an integral scheme to transfer risks in the Mexican government. It's not the only instruments that we have, and it's composed of several elements. Some of them, the Ministry of the Treasury are responsible and are geared towards this ability to preserve the resources at our disposal so that we can help communities and people to be back on their tracks as quickly as possible in the event of a disaster. So that's why we think that it should be incorporated as a key element of development, of current development and of future development, so that we cannot distract ourselves of the main tasks of this development, which in our view should be more inclusive, more fair, and obviously racing towards the risk that we are facing, not only in terms of the nature, but also technological changes, how to incorporate it, how to help people to take these challenges and make them an opportunity for development. I just let me say to you that a few years back we were saying that no one knows better than the insurance sector, experts in insurance, what to do with risk, and our communities should help get that help and assistance from those experts. We have in Mexico tools. We have obviously the catastrophic bond that we have been building for many years with the World Bank, and has provided very good mechanisms. I will probably talk of that later if I have time. Probably not, but the idea of that catastrophic bond is precisely to guarantee the resources to answer for an emergency and to do it with a parametric scheme and a transference of risk to the international markets, so that really we don't have to absorb the shock that a disaster causes. The second one, obviously, is it's a great opportunity for public-private partnership. We have been doing that for quite some time. I would like just to refer to two examples. One, with the United Nations Development Program, the Insurance Development Forum, we have this program for it's a parametric insurance for peasants, corn producers in Mexico, in the very poor states, and it was a very successful pilot. I think we were very successful, and now we are working on a second pilot. We are now in discussions with the Ministry of Agriculture for what we aim from quite some time, which is to escalate that based on the success that we had, which I think is for us a very good news because of the economic and the social relevance of this social protection insurance policy, because corn producers in Mexico have a strategic relevance, not only because corn is our main staple, basically, but also for its cultural impact in our society. And also we are preparing, I would say, a second pilot, and some people in this panel are going to get some news from us asking for their advice, because we would also have to develop this further to establish a female peasants producers, not only for corn, but also for some endemic produces that we have in Mexico, and they're very vulnerable to these kind of disasters. The idea, obviously, is just to preserve the ability of the people to continue producing, to remain in business no matter what. And the second one, we have been developed with l'Agence Française du Développement and also with the private sector, and in this case, a French insurance company, is a policy for female artisans, female indigenous artisans. And the idea originally was just to preserve their tools in the event of a disaster, to preserve the elements that they do to get their production, their handcrafts. But it evolved talking with the community, talking with these women, and also has a health component, which is geared towards the needs of women, in particular indigenous women, and also that takes into account the kind of diseases that are prone to suffer these indigenous women because of the products they use in order to gain those resources. And we think this is essential in a country like Mexico, because the role of these women has changed. Before, it was a complementary income for the family and the community. But how markets have evolved in terms of the agricultural world and the handcraft prices, in many communities now it's the key source of income for that family and that community. So it is even more relevant that we keep them in the market, producing and selling, and therefore receiving income to keep the families afloat, and also that we can provide them with some health assistance in some of these elements. So basically, I would say international cooperation, partnership, public, private, opens a great role a great number of opportunities. And if we think in a very strategic way, I think we should contribute to development. And also, on the other side of the equation, the resources that the insurance company have to invest in order to preserve the reserves that they require to answer to sinisters and events should also find a way to be invested in a strategic way towards a more inclusive world, a more sustainable world. In Mexico, we have adopted last year a strategy for, I don't know if my translation is going to be very clear, but it's for sustainable financial mobilization. And as part of that document, we have created a taxonomy with some of the areas where we believe not only the insurance sector, but also financial actors should gear their investment so that, and in fact, that's a component that we have incorporated to the CAT bond. We have asked the World Bank that the resources that we devoted to pay for the insurance policy and then for the bonds should be dedicated to sustainable projects. It's not, and it should be also considered in the insurance company. We know low risk investment most of the time, and long-term investment. So we should also think which areas are essential for the development of our societies, where this kind of products, and the Mexican government, we are developing some of these products, which are the green bonds, which are with this idea, not only to find its way in the international financial market, but specifically to offer a possibility to insurance companies to also have ESG responsibilities that some of them take it very seriously to really help them and build together a path to achieve a sustainable future. That's how we see, and that's this process, and that's why we remain fully committed to the idea, of course, of that the development design, these models of where the world should go, should consider that insurance makes sense, and the insurance also makes sense in particular for those the most vulnerable. Thank you.
Thank you so much, Mr. Hector. Really, some very wise words there. I just want to pick out a few things. I mean, there's a lot there that you told us. I mean, to pick out a few things before we ask Ekosway to join us. I mean, the issue about how insurance can target vulnerability, you brought up a few times. Also, I think, which is sometimes we don't always talk about, that insurance is much more than just an insurance. For example, you mentioned the cultural value of ensuring that farmers are doing what they're currently doing. You also mentioned, you said it several times, ensuring, for example, that women are still producing, still are farming, still are actually having their SMEs and able to continue that work. In light of the hazards and risks, that's what insurance can do. And there's many ways in which you pick that out. So thank you so much for your time there. What I'd like to do is now move on to our next speaker, if I may. Great friend of ours and good collaborator in many countries around the world through the Insurance Development Forum. So Ekosway Iyahen, Secretary General of the IDF. Question for you right here at the top. So as a public-private partnership itself, led by the insurance industry, but heavily supported by international organizations like UNDP, like the World Bank, and actually like many others, including by UNDRR. We'll have Kamal talking a little bit later. If you can sort of unpick for us, if you like, how the role of insurance, in particularly looking at reformed international financing architecture, which is mentioned, for example, within the FfD process, how do you see that as being perhaps better articulated to enable developing countries to prioritize climate and development investments? If I may give you the floor.
Okay, thank you, Jan. It's a very complex question, so but I will try. Just to say, it's great to see so many familiar faces around the table, and just to say thank you to UNDP for jointly hosting this with the Insurance Development Forum. It's an issue we have been advocating for decades. So it is finally good, even though the circumstances are unfortunate, to have this issue squarely placed on the table in terms of the attention that it deserves. So to the question, I think, last year you would have attended our summit in London, and the Barbadian Prime Minister actually left us with a quote that I think elegantly captures the issue, which is the issue that we've been talking about for such a long time, which is that ultimately what is not insurable is not investable. And I think that expression points to a number of sobering facts that are important in informing the discussion today around, when we think about reforming the global financial architecture and the role of insurance. I think the first point is that it was a bit of an acknowledgement that insurance is an important part of the global financial system. And the fact that it plays a multifaceted role that is often not really and truly recognized, as alluded to by Hector, in terms of understanding risk, the role that it plays in strengthening household and business resilience, and also facilitating the flow of capital, and also helping to support economic and financial stability, if it is at a sovereign level, or if it is at a household level, or if it's at an individual level. There's also an important point, which is that globally, insurance contributes between 5 to 5.3 trillion on an annual basis to global financial resilience in the form of insurance claims and benefits payouts. Very few people know these basic facts, right? In addition to that, insurers, are sitting, they manage considerable assets, 35 trillion in assets under management by the insurance industry. So it's a really powerful lever when we think about shaping global financial systems. But at the same time, to my second point, the sad reality is that these figures do not really speak to the experience of most developing countries. And you said it, Jan, these are countries most around the world where you have 2 to 3% insurance penetration rates. Again, a figure that most people don't really, have their head wrapped around, but it's an important figure for those who are working within the development space. Too often, insurance is seen as a luxury. It's for affluent households. There are issues around scalability. We don't necessarily really think about what is the impact when people don't actually have protection. What kind of risks are they having to take without the security available to them? There often is, I think, again, something that you alluded to, Jan, a limited perspective when we think about insurance and insurance markets. It's often thought about in terms of the pure financial product, which is important, and the spectrum of that, but it's also about the risk management capability that allows one to understand risk, to price it, and to send, or the opportunity to send signals associated with that. And again, in thinking through the industry, there's the investment side of the balance sheet. How do you use that to shape the kinds of investments that are being made or are needed for the world when we think about resilience? And what is the level of protection, or the kinds of protection systems that need to be built when we consider a world of increasing risks and uncertainty? And then I would also add a slight nuance, which is that oftentimes when we think about insurance, it's often about, financing after a shock. And the conversation doesn't quite evolve to the earlier point I made, which is the role of insurance in facilitating people to take on risks and unlock opportunities, right? And so if we are serious when we talk about financing for development, creating a new global architecture, a new future that is more inclusive, etc., we also have to bridge that with what opportunities and products and services and tools are we offering people to be able to create new realities. And that is beyond just looking at, traditional grants, aid, development assistance, to really exploring what does that look like with the private sector. The third point is that, this issue of the broader conversations that are happening around financing for development, major international climate conversations, development conversations, the absence of a stronger insurance risk management voice within that, or presence within that, means that we miss basic opportunities. We miss basic opportunities where, you have the chance where there is a convergence of interest between the insurers to see a reduction of risk in order to ensure insurability, right? The interest, yes, in expanding markets, but also the interest from the public sector in delivering public goods, better social security for communities who are particularly vulnerable, for farmers who are taking on huge risks dealing with climate change and need better solutions available to them. So for me, that's a real flaw in the system when we do not confront this issue of how are we bringing insurance and risk management into the broader conversation and lexicon around the financing for development space. Then the fourth and final point I would make is that, you know, the world that we are living in is incredibly complex, politically, from an environmental perspective, socially, etc. The reality is that the insurance industry also cannot do it alone. And we've heard about public-private partnerships. My observation is that, you know, public-private partnerships, we say it a lot, but when it gets to the doing, there is less success and there is not as much invested in that space, because ultimately it also requires stepping out of silos and the way in which institutions approach. And so I think, you know, on the one hand, there's a tremendous opportunity that we have before us in terms of having the sector and its risk management capabilities as a portal to leverage in this conversation. But the reality is that it cannot be done alone. And so that means also the ability to construct partnerships that can facilitate that and build the efficiencies within these collaborations that can allow us to ultimately deliver. And this is where obviously the work that we are doing with the Insurance Development Forum, with the UNDP, with the World Bank, and others is really important, because it's about shaping global policy conversations, but it's ultimately about what are the solutions that people need and want today. So I really want to, you know, acknowledge, you know, Mr. Santana, your reflections on very practical solutions. Because there are things that can be done today, but we are not necessarily moving as fast as we can, or at the scale that we could potentially move in terms of collaboration across both public and private. Well, I hope that that answers your question, Jan, in terms of the urgency and the need. It's complex, it's necessary, and I hope that, you know, our conversation tonight can contribute to that.
Thank you so much, Ekeswai. I mean, first of all, I'm going to find myself duly and appropriately chastised because, of course, this is not a UNDP event. This is a UNDP Insurance Development Forum event, but also with other colleagues as well. So thank you for just reminding me and others about that. I mean, there was a huge amount that you were talking about. I mean, I just wanted to focus on one particular aspect which we talk about quite a bit, but actually even we in the insurance community that we work with very closely haven't perhaps talked about enough, which is that virtuous circle of insurance. The more insurance you have, stripping away risk, stripping out uncertainty, and actually incentivizing innovation and investment. That investment, therefore, demanding more insurance. And that's really, you know, like a core part of the FfD4 document, if you like, which is entirely missing. And I think for all of us who are looking at the world of investment, never mind looking at the world of financial resilience, that should be something for us to be at least concerned with if you look at the document setting the scene for us into the future. I think this is a perfect opportunity, if I may, now to bring in a good friend and colleague, Mr. Kamal Kishore. He is the SRSG, the Special Representative of the United Nations Secretary General for Disaster Risk Reduction and the head of the United Nations Office for Disaster Risk Reduction. So Kamal, pleasure. Thank you so much for joining us. I'd like to ask you a question, please, if you could, about how does the UN Office for DRR, how do you want to see elevated, or perhaps the priorities which you think are missing or are misplaced in some way within the current negotiations when you're considering issues of, if you like, the renewed global financing framework?
Thank you, Jan, for giving me this opportunity and for convening this very important conversation. Let me structure my response in three parts. First, let me say a few words about how I would articulate the problem. Second, what do we need to do about addressing that problem? And then how do we do what we need to do? So on the problem bit, so last year alone, in 2024, the world lost something like $320 billion in direct damages to disasters. And that's just realized risk. If you look at the measured risk, which is not realized, the expected annual average loss is close to $1 trillion. I mean, this is clearly not, something we can afford to carry. This is a significant percentage of the size of the global economy. If you have that kind of risk, and when that risk is realized into real damages and losses, for some countries, it's a significant percentage of their GDP. There is no way we can achieve any of the 17 SDGs, whether it's poverty, it's drinking water, sustainable cities, or health or education. So it's really, we are dealing with a problem which is a central problem of our times. It's not a cute boutique disaster risk reduction project. It is the key. It's in the center of our development discourse. Now, what do we need to do? In my assessment, there are two things. One is that everyone is saying that you invest $1, a yen, a euro in disaster risk reduction, and it pays back 7 or 10 or 14. Yet, not enough is hardly anything is being invested in risk reduction. We need to really change that. And to change that, there are two things. One is that we need ring-fenced resources for disaster risk reduction to reduce the risk which is already there. And we know how to reduce it. The method of reducing that risk, whether it is about strengthening bridges or it is retrofitting houses, we know that, but there are no resources for that. So we need ring-fenced resources for reducing risk which is already there. And second, and perhaps more challenging, is how do we, too much used and abused term, mainstream disaster risk reduction in development spending so that every school, every hospital, every airport, every bridge is built in a manner that it can withstand the hazards that are occurring now and might happen in the future. The second bit really requires a new level of accountability within the government systems. That brings me to my third point, that we talk a lot about what needs to be done, but how it needs to be done really requires some basic plumbing in the national systems. We do not even have commonly accepted risk metrics for across the world. There's huge information asymmetry between the large insurance companies and sovereigns and sub-sovereigns, particularly in the developing countries, about just a sophisticated understanding of risk itself. A lot of the risk models, as you know very well, are proprietary. So I think we really need to change that. I think there has to be much greater democratization of risk information, much better and much wider understanding of what is the risk that we are holding. And that also needs to be underpinned by things in the national budgets, national spending systems of budget tagging, budget tracking, so that we know, as a part of a project which is trying to ensure drinking water for all, how is that project investing in disaster risk reduction? Education for all, how is it working on reducing risk in schools and other educational facilities? So I think that plumbing bit is as important, perhaps not as attractive. It's very tedious, boring work, but that's the foundation on which we are going to be able to build financial resilience for all. Simple things like there are so many countries where, half the women do not have a bank account. What is the kind of financial resilience you'll talk about if they're not even part of the formal financial system? So I think it's really important that we focus on these boring, tedious issues as well, because these are the foundations on which we will build everything else. Now, just my last point on FfD4 is that we are delighted to see that there is a reference made to disasters and their impact on development. But I think it doesn't go far enough right now in terms of suggesting what do we do then? So I think there's a lot more room to work on that, and I hope member states and co-facilitators will focus on this. Thank you very much, Jan. Back to you.
Thank you very much, Kamal. I mean, a lot there to talk about. I mean, I guess from the if you like, the relationship between insurance risk financing and also risk reduction, because we need to also reduce risk. Insurance itself is not a magic bullet to the situation that countries find themselves. They need to adequately invest in risk reduction, in adaptation, in development, to get us to conditions where insurance can actually flourish. This is also the relationship when we talk about risk reduction and uninsurability. Uninsurability is a huge issue, and partly because risks are growing far too much for insurers to be able to deploy their resources. I'm also thinking about, as you know, I did in the past research into financing for DRR, and it has always been very weak. Like for every $100 of ODA, for example, we only spent 40 cents of that towards actually protecting that ODA from the very impact of disasters where that ODA would be deployed. So that is a really important thing for us to consider. There's also the interrelationship, and then insurance colleagues like Ecosway and Garance, maybe they'll pick that. Maybe Garance, who's coming next, would pick that out. Is how actually insurance has in the past actually influenced risk reduction. I'm thinking perhaps particularly here of the example which is quite often used, for example, how in the US it's actually influenced heavily and regulation with regard to fire hazards in urban settings, and basically created the entire risk reduction and fire regulatory standard through the fact of, if you like, the need to deploy insurance in those settings. So thank you, Kamal, for your time. Absolutely on time, by the way. Perfect. What I would like to do now is bring in my friend and colleague. Oh, everybody is a friend and colleague. I don't know if you realize, but I hope that is fine. But it's also true. So this is Garance Vates Richard. She is the CEO of AXA Essential. You're going to have to tell me how to say that, because I'm going to miss that. And co-chair of the Insurance Development Forum, Inclusive Insurance Working Group. AXA itself is one of our great partners in many different ways. They were a partner on FSO SAFA. They actually they take the lead on that underwriting that Canny mentioned. They're working with us in a whole set of countries. I think it's 13 countries. And actually, we're working with Garance and team on a few of other things as well. Garance, question for you, if I may. From an insurance industry perspective, how do you see the relationship between insurability, which has come up quite a lot, and our capacity to deliver on the Sustainable Development Goals from your perspective within industry? And are there particular priorities that you feel insurers, risk management professionals want to see more highlighted in the FFD process and the negotiations that member states are considering?
Thank you, Jan. Yes, dear friend and colleague. First of all, thank you for inviting me. I've been having a tough time in the last 45 minutes because as people have spoken, I've eliminated things that I wanted to say so as to not repeat. And I also realize we're a little bit late on time. So hopefully I'm going to make this really short and sweet by saying I very much agree with a lot that's been said. But let me deep dive on a certain amount of elements and try to save some time. First of all, I just wanted to start with one of the sentences that I think has stuck the most in my mind over the years. It's when in 2015 at the COP 16, I think, or Henri de Castres said, at the time CEO of AXA, he said, a 2-degree rise in average global temperature may still be insurable, but what's certain is a 4-degree rise is not. And I think that encompasses basically everything we're talking about. So as we know, 2024 was the first year where we surpassed 1.5 degrees. At the time in 2015, we thought 1.5 degrees was going to be the max, right? So obviously, just to summarize, in a time of action, it's an urgent need for what everyone has said: collaboration in pre-financing, risk adaptation, prevention, blended financial structures from both the public and private sectors. We agree on that, right? What I'd like to just underline here is that it's even more important in the current donor landscape in general, and following the restructuring, for lack of a better understatement, of USAID in particular. Let's not forget that. But back to your question, your specific question, looking at it on paper, I would answer that there is no relationship between the SDGs and insurance today. There is just none. in the sense that insurance has been sidelined within the development finance conversation. And what the UNDP has done is absolutely unique in such a short amount of time. And I know for a fact that insurance was never taken into account has not been taken into account by any UN agencies ever since the United Nations were created at the end of the 40s. And the UNDP has picked that up and gone so quickly in the last years. It is just something that we really need to note. I only want to say that one SDG target mentions insurance once, that's 8.1, right? It's not included in global access to financial measurements, such as the FINDEX. And I have to say, I was slightly disappointed to see it was only mentioned 3 times in the zero draft. So just to summarize, we're missing a key piece of the puzzle. We're going to stop missing it, and we've stopped missing it for a while. It's starting to take shape, right? But if you look, I found a very interesting Allianz paper this year, and they did something that is very, very, very impactful. They looked at the correlation between insurance penetration and SDG achievement. And what they saw was for every 1% increase on P&C insurance penetration, the SDG index per country moves on average 5.8% closer to SDG achievement. Don't ask me about the methodology, but I fully trust Allianz. What's interesting is that when you look at life insurance penetration, the number goes to 1.7. That's where you understand that disaster risk reduction is about obviously everything linked to protecting, preventing, reducing risk linked to CatNat and climate. But also to Hector's point, to Kamal's point, to Kani's point, and I'm calling all of you by your first names because I don't remember your last name. So apologies for that and for that intimacy. But it's because it's also once removed to protect on health risks, on life risks, on protection risks, and P&C beyond climate. And I think Hector really made this point very clearly. Is once removed from climate, but just as important, because the stronger we make the people, the more resilient they're going to be to climate change. So back to the point, and I know this is controversial, but thankfully, Jan, you said it, is that insurance is not the silver bullet. So we need to acknowledge that some risks are becoming uninsurable by a single insurer, by several insurers, but without proactive risk management or prevention, many more will be. And we have to stop looking at it as comparing affordability, profitability, and the capacity to measure the risk. So what could we do? I like very much the fact that you've touched upon the US, Jan, because if we're focusing on loss prevention to improve long-term insurability, insurance is particularly useful at building resilience alongside, as I just said, other measures. And you know, it's good at delivering on new products. AXA, other insurers have been doing it. Parametric insurance, bundling, etc. New mechanisms of distribution, like Hector said, with regards to the farmers. But we can go much further. And your point, Jan, I think, was in terms of creating an industry standard around, for example, building back better. Yes, it's more complicated, and probably the US has more resources to do that. But what they've done in Florida, which I'm sure you're all aware of, we need to find an even simpler way to replicate in other countries. And here I'm referring to fortified endorsements for policyholders. To the point that Koswehi made, and the quote she took from the Barbados finance minister, what is not insurable is not investable. I would like to introduce a nuance to that, in the sense that insurance is a powerful tool for catalyzing a cycle of investment. So we protect risks for all stages of infrastructure projects, de-risking challenging environments through political risks or natural catastrophe cover. And that means that actually what becomes investable is because it's more insurable. So I would add an element of optimism in the Barbados' finance minister's quote, I think. And in this space, a lot of us are innovating. I'd like to quote actually AXA Climate, who's providing transition insurance to support farmer moves to regenerative agricultural practices, right? Nature-based debt instruments and carbon markets that are insured. But we need to do more, particularly through engagement. And this is the optimist streak, right? Through engagement in early stage investment projects. If we involve insurers in early deal structuring, we can assist with unlocking additional project finance, which is really needed to bridge the SDG gap. And I think we know that. I feel like I'm just, communication is repetition. So Ekoswehi, I think you even underestimated to some extent how much institutional investors such as insurers have in assets under management. I actually think it's 40 trillion now, US dollars. And what is that? That's 10 times more than what the UNDP has actually estimated is needed to close the financing gap of the SDGs. And I think I would just like to underline a great idea of project here, which is the idea of infrastructure development blueprint, led by BlackRock and AXA, which is really a showcase of insurers as asset managers that are driving investment and adaptation against climate risks. So just to summarize, it's better recognition of insurance and its role in all the frameworks that creates quantifiable targets, right? Better collaboration within finance and with the public sector to address sort of the market failures and make it less uninsurable or less quickly, and then fostering the infamous enabling environment. And this does include, and I'll finish on this, something that is extremely important, and that's linked to sandboxes. What I would really love, but that's part of the next question, which I'm sure I will not have an opportunity to answer, is to understand that, and I think we all do, the devil is in the detail, and the detail is regulation. And as we know, you know that the insurance industry is the second most regulated industry in the world. We don't have time to play the quiz, or I'm going to ask you to tell me what you think the first is. So I'm going to give you the answer. A lot of people answer banking and a variety of things, or pharmaceuticals. No, thankfully, the first most regulated industry in the world is the nuclear energy industry. But the point being, we're so regulated, rightly so, because we need to make sure we protect our clients correctly, that if we don't work on regulation, and honestly, it's sometimes the how do you say, hell is paved with good intention. I think that's the expression. Then that's what's really stopping a lot of us from doing better. So thank you so much. And I hope I haven't repeated too much. I've really tried to take out as many things as I can.
Well, thank you, Garance. That was really inspiring, and actually it was a nice capstone to the end of the piece here. I just want to note, and there's a lot to take away there. I want to say a few things. We want to duplicate this. So I thank everyone to come to this joint UNDP Insurance Development Forum event. Now, we are crafting our own kind of input paper into the whole FfD process. We'll make sure that it's publicly out there. All of the parties here will certainly be, I think, some of them already said yes, they would like to be a party to that. So Garance, some of your inputs, and of course the other colleagues, Kamal, I know you've committed to working with us on that, which is excellent. Because I just want to pick out some from a kind of UN/member state perspective. You're right, the SDG is largely absent from the issues of insurance and development. And yes, we have done a lot in the last 10 years. We have a very large program of work with Ecosway and the insurance community, for example, 64 million people covered by financial protection if all of those policies go forward. But that's just a scratch in the issues of risk and financial resilience. And of course, you've all picked out the interrelationship, not just about financial resilience, but also relationship to investment. And the three COPs, the three conferences of the parties that we saw last year, biodiversity and climate and certification, if I may say, I thought they were pretty weak when it came to issues of the relationship between the very things that they were talking about and hazard and risk and shock from the perspective of DRR, Kamal's wheelhouse, if I may say, Kamal, but also from what you do with, risk that you don't reduce, the financial resilience aspect. And then, yes, here we have FfD4, which also, in our perspective, really needs some significant attention if it is going to deliver on the very things which it says, which is about investment and securing that investment into the future. I don't know what I'm going to do. I'm going to end there. But I thought, Kani, you stayed with us throughout. And I know we didn't plan this, but I don't know whether you'd just like to say just a few words just to help wrap us up. But I give you the opportunity if you'd like to, because you so kindly stayed.
Thanks, Jan. Yes, I did. It was just so interesting. I mean, look, all these colleagues, it is truly, and I'm not just saying this because it's the right thing to say. I feel this is a group that can shake us up a little bit in the UN system, but also in, I think, in the industry that we all work with, because it hasn't gone far enough. We're not being bold enough. And in this world today, where some of the more traditional, let's say, financing of development is under such threat, I think it's a time to actually go counterintuitive and grow the spaces where it makes a huge difference. And this is the group that's talking about in really not just courageous, but very smart and innovative ways, saying we've underused and really underthought, really, the potential of what can be done. And this is why, to me, when I look at from whether it's from, as I said, those markets in Afghanistan to the big disasters and the recovery, Kamal, that we work together on, this is a tool that really, a set of instruments that can make all the difference. But it too needs to lean in and say, look, when it comes to things that are of that larger public good nature, the bottom line is also about larger human safety and prosperity. So sharing some of the gains with, I think one of the colleagues said 35 trillion in assets are managed by the insurance industry today. Goodness, I mean, I thought it was somewhere there. I didn't realize it was that big.
40
there
trillion.
you go. Okay, well, there you go. Just a fraction of that. Just imagine. So yeah, so for me, every time I thought, okay, I've just got to get to my next thing, it was just too interesting. I've learned a lot, and I really deeply appreciate this conversation.
Thank you so much, Kani, and thank you so much. And we are going to reach out to you and your team. Hopefully you'll join us in the next version of this when we do it for a little bit down the line, hopefully having influenced the agenda before us, because as you say, it's so important. So I'd like to say thank you so much to the great speakers we had tonight. And as I said, we will be communicating about this. It certainly will be online as well for a wider audience, but also through our input into the outcome paper of FFD and through future webinars and events, we will look to invite others to comment and support this process, because I think, as everyone has said, it is really a missing link when we look at how financing risk and development is reflected within the FFD process, and critical to all of us, all of the communities and countries that we're a part of and we also serve. So thank you so much for your time, and wishing you all good night, and for Hector, perhaps, and Kani, a good afternoon. Thank you so much.
Thank you.
Thank you.
Thank you.
It has been a pleasure meeting all of you.